Hello, my market community, stock market jobbers, option market jobbers, technical analysts, market students. Anyway, if you follow me, and you do because if you didn't, you wouldn't be watching this, but you know that I think that a lot of these, quote unquote, traditional technical patterns are, I don't know if the right word is deceiving or it's just not worth paying attention to. I don't even know what a wedge is. All right. I don't know, but as technicians or as stock market jobbers, when we look at a chart, we want to look at it through the prism of supply and demand. And what does that tell us about investor psychology? And if you can do that, you can understand how to read charts. You don't need to memorize all the patterns. You don't need to read all the books. You just need to understand what it is a graphical illustration of. So, today we are going to talk about ascending triangles, and I threw in a descending triangle just to kind of show you, but it's really just the opposite dynamics. If you can understand one, you can understand the other. Now, one of the issues that I have with technical analysis lessons or books is they're always talking about, oh, last year I said this happened, or 3 months ago I said this happened, and it did. Hindsight is 2020. Okay, so I like to do these lessons in real time, and that's why I would invite you to join our community and to come back and check out stuff in real time. I mean, no one's perfect, but if you can understand what these patterns illustrate, it's going to make your life as a trader so much easier. It could even be the thing that turns you from an unprofitable trader into a profitable trader if you're not a profitable trader now. So here's Lyft. This is today's chart. This is real time. And one of the patterns I do think has uh, credibility is the ascending triangle pattern. And this is pretty easy to understand. You don't need to be a market guru or a former hedge fund trader. But notice this, the sellers have been hanging out since the beginning of March around 1050. All right, basically what this shows is the sellers are okay with, like, all right, well, whatever. If I sell it, I sell it. If I don't sell it, I don't sell it. I'm going to wait for the buyers to come to me. If they come, they come. If they don't come, they don't come. I want to sell, but I'm not really sure. I'm a little iffy. So there's a big line of these sellers or a big group of investors at resistance here. What is resistance? It's a large group of investors trying to sell at or close to the same price. So they're just kind of hanging there. They're taking on Wall Street lingo. You would say, oh, they're taking a stand. Now, what do we see on the bottom? What is this ascending line? Well, as time goes by, the buyers are becoming more aggressive. Markets go in peaks and valleys. And when the valley is at a higher level than the valley before it, we call that a higher low. This is not astrology. It's not like some kind of weird talk. It's an illustration of investor psychology. Higher lows form because the buyers are becoming more aggressive when time passes. They're getting more antsy. They're getting less, or they're getting worried they're going to miss buying their shares, so they raise their price. So the ascending triangle is an illustration of buyers who are becoming more and more aggressive as time passes, and sellers who are just kind of chill and just being like, yeah, whatever. I don't care what market it is, real estate, apples, peanuts, pawn stars, whatever market it is, you got aggressive buyers, you got complacent sellers. It sets the stage for a move higher. So there's a good chance that Lyft breaks out above this and moves higher. Now, why is there resistance? I'm going to get a little bit away from this because I always like to talk about levels because that's really what you need to understand. Why is there resistance at a level that was support? Well, there are people who bought here who regret doing so when the price goes lower. They tell themselves, if I can get out at break even, I'm going to. So they place their sell orders at the same level they bought at. If you got enough of these remorseful buyers placing sell orders, it creates resistance. Once these sellers are out of the way, it sets the stage for a move higher, right? So these are people that are like, you know what, I'm going to sell, but I'm only going to do it if I get out of break even. So they're content with it kind of being stubborn and hanging out around 1050. But the buyers are like, oh, this stock is the greatest thing since sliced bread. I don't want to miss out. I'm going to pay a higher price. Blah 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 blah. So the ascending triangle pattern is a traditional classic technical analysis pattern. And if you look at it through the prism of supply and demand and investor psychology, it completely makes sense. Now, as you can imagine or suppose, the opposite is true with a descending triangle. So this is the same stock. This is from 2021, but I figured it would just make sense. What do we have here? We have a clearly defined support level, right? Around 44.25. The buyers are content with waiting for sellers to come to them. In the ascending triangle pattern, the sellers were content with buyers coming to them. In the descending pattern, the buyers are kind of cool and will wait for the sellers to come to them, right? In a bull market, the buyers go to the sellers and pay their price. In a bear market, the sellers go to the buyers and accept their price. So we got this group of investors, they're hanging out around 44.25. They're really patient over the course of this year. It's like, all right, if someone comes and they're willing to hit my bid, cool. If not, whatever. I'm going to just go to the beach or watch a show. I want to buy it, but I'm not like really that concerned. But look at this, as time is passing, now instead of higher lows, we have lower highs. This means the sellers are becoming more aggressive and they're willing to accept lower prices as time goes by. So you have complacent buyers, aggressive sellers, whatever market you're in, if you have aggressive sellers and complacent or chill buyers, it's a good chance the price goes lower. Now, before I go, I just got to throw in one more thing here. Notice how support became resistance. I mean, we have lessons on this, and I talk about this a lot, but you can see this on pretty much any chart of any liquid security. Support becomes resistance because there are people who bought here who regret doing so when the price goes lower. They tell themselves, if I can get out at break even, I will. So we have remorseful buyers placing sellers at the level that was support. If there's enough, turns the support into resistance. And that's what happened here. All right, everybody. So before I go, just remember technical analysis, if practiced correctly. And technical analysis has a bad reputation, and it deserves it because I see so much garbage out there. But if it's done correctly, and which you will learn how to do if you come to the stock market jobber, well, you probably are here already. If not, you wouldn't be hearing my voice. But anyway, if you look at it through this prism of human psychology or investor psychology and trends, levels, momentum, it's going to be way easier for you to understand these charts. They're not astrology, they're not tea leaves. If viewed correctly, they are graphical illustrations of supply and demand and investor psychology. All right, everybody, thank you so much. I look forward to talking to you tomorrow.